Good morning, everyone. It is October 27th, and we are looking at a fairly positive market ahead. There's three big topics that are going to move the market, and I'll start with what I think is the biggest topic, which is a trade deal between the U.S. and China, where rare earths could be negotiated and export controls of semiconductors, soybean purchases, all that good stuff. If that happens this week, boy, the market, I think, is going to go higher, to say the least. We've got massive earnings. So we're going to preview 5 of those big, massive earnings on this live stream. And I am joined by my colleague who's going to go over the charts. I'll go over fundamentals. How you doing this morning, Daryl?
Yeah, I'm doing wonderful, Victor. It's good to be here. Hello, everyone.
Yeah, it is great to be with you. And I think as we look at these companies, I will be locked in on your research on charts. The fundamentals on the 5 companies we're going to look at is just varying degrees of high quality. And I would encourage all investors, but especially new investors that are learning and saying, how do I find quality businesses? When we look at companies like Microsoft, Google, Meta, Apple, Amazon, you're looking at an example of a high quality company. It's like, hey, I want to play quarterback for I want to be a high level quarterback. Well, look at Tom Brady. Look at Joe Montana. Look at these guys who are like the standard of what a very high level of performance looks like. So when we look at these businesses, look at what's their top line revenue doing? What are their margins look like? What do their cash flows look like? What's their business all about? Like, is it a business that is easily replaced, kind of here one day, gone the next? Is it going to be like one of these fads and so forth? All those things I'll try to kind of focus in on, because you can make lots of money if you find a small cap that has a lot of these attributes and you find it early, you invest in it, you stay in it for a long time. You can 5 bag your money, 10 bag your money, 20 bag your money. And then you feel like, man, that's a great way to build your wealth. So we will go over the agenda for today. Is we're going to talk a little bit about the 3 topics that are going to move the market. And we'll start with the Fed, go to the trade deal, and then we'll land on looking at companies that are coming up in these earnings, and we'll analyze these companies. If you guys want us to look at a stock, that is completely something we can do. It looks like Falls Grave wants us to look at DEF. Happy to do that, sir. And thank you for joining this morning. And if anybody else wants a stock reviewed, if you're a member, just pop it in the chat. If you're not a member, no big deal. $5 super chat or become a member. Then you can request stocks on the streams. All right. So I think the first topic, the Fed. I think the Fed probably, we all know what they're going to do this week. What are you expecting, Daryl, and any kind of hiccups that you see in that rate cut?
I don't really see any hiccups. I think it's pretty much a foregone conclusion that we're going to get 25 basis points this week. I think it's going to be somewhat underwhelming because of it's falling in a week where we have so many big earnings. So I think for the first time, maybe in a while, people are going to tune in for sure. But I think it's going to be a little underwhelming compared to the earnings this week.
I agree. And I think the other storyline that is getting a lot of attention, and it should, is the trade agreement between the US and China, because we've heard about this thing for a while, but we especially heard about it about 8 months ago when the market began to sell off like, geez, like we're going to go into the Great Depression. And but if we put that to rest, I think it puts a lot of concern off the table. And not only can the market move higher in October, we're setting up for a really strong bull run. And what do you think about longer term? Like if we get this trade deal, what happens this week and what happens over the next 12 months?
One other thing we have kicking in after the earnings complete is buybacks restart. So they've been in a quiet period, not doing buybacks for the last probably 2 weeks. And there's $1 trillion worth of buybacks announced for this year. And most of them tend to happen in the fourth quarter. So that's going to be another big push to higher prices in the fourth quarter, in my opinion.
Yeah. Oh man. So a lot of things are kind of the perfect storm for the stock market to go higher. All right, perfect. So what we'll do is we're gonna get into the 5 companies that are gonna announce. We'll go through a couple and then we'll get into DEFT, and then we'll see how many other requests come in. But let's get into some stocks. The first one they're going to announce on Wednesday is Microsoft. And Microsoft is the second most valuable company on the stock market. It's gone up 1.55% in the pre-market. It's done well this year, up 24% with a dividend rate of 0.7%. And this thing's been a winner for the 5-year. It's been a great winner long-term, and just a quality business with revenues of $281 billion. P ratio looks a little high, 38. That is high. Forward P is high. Analysts really believe that they're a good buy. And I think that there's some recent analysts are publishing their buy ratings on Microsoft. It's kind of like everybody's on a buy rating for Microsoft. The reason for that is this is a very big company, 281 billion, and they're growing at 15%. And they're in businesses that are really desirable. The businesses include software, which is their legacy business. That's where they started. Cloud infrastructure, where they're part owners in OpenAI, but I think a lot of OpenAI workloads run on Microsoft Azure, which is the cloud infrastructure piece to Microsoft. And those pieces, obviously, if you're in the data center, it's something that the market really, really likes because there's a lot of future growth that's expected. So they have a very good strategic business. As we look at cash flows, and this is where, again, what are the things that make Microsoft and the rest of these companies super valuable? Well, I just showed you revenue growth. That's important. Cash flow. This is where value begins to get weighed. This is the true value of a business, is how much cash can you produce, put it on the balance sheet, buy back shares, give us dividends, acquire other businesses and make the overall enterprise more valuable. And these cash flows are magnificent. $71.6 billion. They produce more cash flow than the size of most big companies. That's how valuable they are. So when you look at margins, Microsoft's at 68.8% for a large scale company like this. It's excellent. Profit margin, 36%, exceptional. And free cash flow yield, 25%. If you put money in the bank was going to pay you 25% interest rate. You'd probably say, I'm selling all my stocks and just putting all my money in that bank, because that yield is tremendous. You would double your money in less than 3 years is basically what that rate of return would do for you. And these guys do that year after year after year after year. So very, very good free cash flow margin that continues just to produce more value for the company. Analysts, 30 of them cover it. I don't know if we're going to see one sell, but they all believe this is a buy. Some of them believe it's a little expensive. Some of them believe it can go higher. And I'd probably be on the it could go higher camp, especially with the factors that are helping the market this week and into the future, like low interest rates, a trade deal, getting done. Those kinds of things are just going to help a Microsoft. They're going to keep growing year after year. They will be close to a $500 billion revenue company in fiscal year 2029, which ends June 30th of 2029. And their profits are going to continue to expand. So this is an example of a high quality business, really good business. And I have a value for Microsoft. I'll share that after Daryl takes a look at the charts. Over to you, Daryl.
Okay. So when they, it was kind of interesting when they did their earnings back in April, they had a share price increase of about 7.6%. And that was a black candle, so it shot up higher and then dropped down through the day. When they announced on the 30th of July, the next day, they had a 3.95% pop in the price, but the candle was also a black candle, about 2 or 3 times the size of this one, and that was the high. That was it. I mean, they got up to 554. They closed at 533, and they haven't really been above that since. Let me see what they closed at 534 2 days later, but that's probably the high close. So since that earnings announcement, you can see they've just traded sideways. They're pretty much exactly where they were. They even closed this gap at one point. So when they were closing here, they solidly closed the gap, and when they were trading here a couple of weeks ago after the Friday, we had a few days that were lower, and that also would have closed this gap. So what we can see, if I just go to maybe like 3 months, I do see some momentum starting to build now going into the earnings. So they're trading above an upward sloping 20. Looks like a declining 50. That should be changing with the prices trading above that 50 line. Let me go back out 2 years so I can see the 200. That's at 455. So they are trading, I don't know, let's see here, about 14% above, not nearly as extended as like gold is right now.
Mm-hmm.
They do have a positive RSI, so the momentum is starting to build going into earnings. It'll be interesting to see if, people sell the news, but we do have positive momentum. It's not quite to where the RSI was on August the 6th, but it is improving. We did have a bullish crossover in bullish territory on Friday's close. So that's a positive signal. Just a few days before that, we had a bearish crossover in bullish territory. The accumulation is not quite where it was prior to their earnings on the 29th of July. They're still shy of that, but there was some distribution, and then about the 26th of August, that has since reversed, and the accumulation is starting to increase So it'll be interesting to see what happens with them this week. The market is definitely looking forward to the earnings based on the increasing prices in the charts.
Yeah, very, very interesting. And the interesting the storylines around Microsoft with its early investment in OpenAI, that was a really smart thing on their part. I don't know what percentage they own, but what we've seen is some companies have kind of stepped in and started doing deals with OpenAI. And I don't know if that dilutes or kind of reduces the shine on Microsoft's early investment in OpenAI. But I think that storyline may affect them. When I value Microsoft, it's a great business, but I just think it's 17% price too high. That these businesses are having to put in quite a bit into their operations of capital into the data center, and I'm still growing it by 15% in future years. This is the trailing 12 months that they have. And just when I weigh the value of these cash flows that I expect, discounted at 7.5%, the cash flows cannot add up to its current stock price. So that causes me to pump the brakes on Microsoft. I've owned Microsoft on two occasions. The first one was for a long time. I owned it for years and sold it, a while back, like 8 years ago, maybe. Yeah, about 8 years ago. More recently, I bought it in 2024 and sold it in early 2025. When we had that huge sell off, I was feeling pretty good about that decision. But then when it came back, boy, it came back with a very, very fast rise. So it was interesting to see that. So
Let
in
me
general,
let me point out that the implied move is 4.9%. So you're looking at a plus or minus $26 window.
yeah, and I'm not in Microsoft. I probably won't be in Microsoft. We're going to look at 5 exceptional companies. 3 out of the 5 I'm an investor in, and you'll see at least my point of view, right? And that is Microsoft, just an exceptional business. Any last comments on Microsoft before we move on to Alphabet?
Nope. I am a holder of Microsoft.
All right. So moving on to another great business, Google Alphabet, and their stock is up 1.92. This stock has been a stock that I really love investing in stocks for examples like this, or I should say, to participate in opportunities like this, which is the market really doubted Google Alphabet for a period of time here in 2025. It was a great time to accumulate shares, which I did. And Google is the second most valuable position in my portfolio. And then the market kind of realized, well, we're wrong about the Department of Justice, and Gemini is now the number one most downloaded app on the Apple store. Gemini is doing great. Their Gemini AI app is really, really good. I've found myself probably using it every time that I'm working. I'm probably using Gemini now because it does provide value, and it's beginning to reshape my behavior. Now, back to the stock, this thing just really rose nicely. This thing was lagging for months, and then all of a sudden it just took off, and it's up almost 50%. And in 3 months, 4 months, so it's been a really, really nice shooting up stock in my portfolio. These guys are $3.15 trillion in market cap. They're bigger than Microsoft, $371 billion in revenues. P/E ratios quite a bit lower than Microsoft, 27. For an exceptional company, I don't think that's expensive. Tiny little dividend, strong buy, fairly priced according to analysts. Again, let's look at an example of an exceptional business looking at the income statement. When you look at a company's resume to the marketplace with numbers involves an income statement. How is the business performing this year based on how many customers are buying the product or service? Are they growing the number of customers? Are they selling more products? Are they able to raise their prices? Do they have pricing power? Do they make lots of money or do they lose money? All those things are in the income statement. Balance sheets like your credit history. Balance sheet represents Google Alphabet's been around more than 20 years. Over those 20 years, had they been like, if you were to look at a household, is it a saver? Do they invest? Do they accumulate wealth? Do they accumulate lots of value on that balance sheet? Cash flow. Are they able to manage their business in a way where they're just always producing excess cash that they can invest, that they can have for the business to work with? So that's the true profile of a business is in these financial statements. Everything else could be useful, but it's just words. Could be very useful, but I'm just saying that you'll probably hear 100 stories on Google Alphabet. None of them probably as important as looking at their financials. So when we look at the financials for Google, as well as any company we're going to look at, you see the top line revenue is a big number, 371, growing at 13%. So let's get our heads around that number. So in a year, they'll grow more than $40 billion in revenue. That's just growth. That's a very good sized company on its own. So the organic growth for Google is exceptional. And when we look at the profits, that's great. You're growing. The free cash flow, 66.7 billion, slightly below Microsoft, which was at 71. This one's at 66.7. And it went down from the full year of 2024 because they're putting so much money in that data center. So they're creating $67.7 billion of additional cash that's going to that balance sheet. They can buy back shares. They could acquire businesses, like they acquired a cybersecurity business. I think they paid $20-30 billion. Well, that's kind of like, at home, you're like, hey, I'm going to buy a new car, but I don't know that. Yeah, I guess so. You're going to buy a car. And maybe it's 5 months of work. That's basically what they're going to pay for the cybersecurity business. They make so much cash. They could acquire businesses like that, and they don't really have to go into debt. It'd be like paying cash for a car. That's a kind of capital or kind of cash flow that these guys are producing. Almost 59% gross margins on a massive business. Profit margin of 31%. Free cash flow margin is down because they're investing in that data center. So again, we're looking at an exceptional business. And when we look at small caps, this is the framework that we want to kind of see if those businesses will ever become. Because if they're going to become the next Google, Microsoft, or Meta, and we can see that, boy, that's a really good investment. I think we're going to see some smaller caps in a bit. I think DEFT we're going to look at later, Mara, and then I'm not sure about OGN. I think they're a kind of old school healthcare company. So this is a really, really good business showing its value through those cash flows. We have 43 analysts covering it, and there's probably a little more of an argument here where some analysts are saying this thing's way overpriced, and some analysts are saying this thing can go higher, and collectively fairly priced. Let's look at their forecast. They're going to keep growing by more than 10% for the next couple of years. They will be above $500 billion in 2028. Their profits are going to expand, and their PE, if it doesn't go anywhere from a stock price perspective, it'll go down. I don't think that's going to happen. I think their PE should be between 25 and 30. So what I think is going to happen is their stock price is going to go up. I happen to believe that Google Alphabet will be the most valuable company on the exchange. I just feel that their business is so darn strong. Search continues to grow. We're on YouTube here. YouTube is the #1 streaming platform on earth, continues to grow faster than any other platform from a percentage standpoint of the major platforms, which means they're just leaving everybody further behind. They have a cloud business that is the third biggest cloud business in the market. They're very strong in AI. I always giggle when I hear stories of people saying, "Oh yeah, Google is falling behind on AI," and I'm like, yeah, I just don't. I can't fathom that idea because they were doing AI before AI was cool, and they have very strong, a very strong large language model. They have a lot strong technologies. They have so many things going for it when it comes to AI, and that it's. I mean, I create videos on Google. You can look at them on my channel. So this business is really set to really go higher, in my opinion. What are the charts telling you on Google Alphabet, Daryl?
This one's going to be really busy because I've been analyzing the heck out of this one. But before I do that, everyone type in your year-end price target for GOOG, just so
All
I
right.
can see what you guys are thinking, because I'm going to tell you what mine is here pretty soon. So this will has a little bit more data on it than we're typically used to seeing in my charts. So let me explain this a little bit. The purple, the darker purple area that you see here, those are called Bollinger Bands. And this inner one, this darker purple, is set to 2 standard deviations away from the 20-day moving average. And then the pink, the lighter pink or purple color, is set to 3 standard deviations away from that 20-day moving average. So if you're not a statistics nerd, then let me show you what these actually mean. So if you have a standardized bell curve of your data, 1 standard deviation will cover about 68% of the data observations. So if you collected 100 points of data, about 68 of those would be within 1 standard deviation of the average. If you're 2 standard deviations away, then you capture 95% of the data. And if you're at 3 standard deviations, you capture 99.7% of the data observations. So if you look at that in these 2 standard deviations, you can see that if you're capturing 95 to 99% of the data, most of the time the prices should fall within those bands, and it expands. The standard deviation expands as the volatility increases. So anyway, I had those on there because I wanted to watch when, for instance, the DOJ found them guilty of whatever they were charging them with, but we're not going to require them to sell off Chrome. We had a 9% jump that day, which took it out of both the, let me zoom up here, which took it out of both of those standard deviations. So it actually exceeded that and then came back within it. So I just wanted to get an idea of what was going on with the standard deviations. Then the next thing that I did, because I actually started buying on May the 9th. I started buying into Google about right here.
Nicely done, sir.
And I had these downtrend lines, and initially when I was back here doing this analysis, I had one downtrend line. And as long as it was going to break above that, then I just continued buying. And then I had another downtrend line as we got to this peak. And when it broke above it, it was kind of a head fake because it did come back down. But once it broke out, it was a good time to buy. I like these breakouts like this. And then we had another one as I got, over to June and almost into July, I had a downtrend line and it broke above that. And it just continued to progress until we finally broke above this high. That's this blue line here. And then there's another trend line matching these two peaks. So at this point, I probably need to modify this slightly just to extend this out a little further because it looks like we just are in the process of breaking through it again. So we're trading above a 20-day moving average. Let me zoom in here. Probably be in fact, what I'll do is I'll just go to like 3 months, a little easier to see. So the 20-day moving average is sitting right in the middle of these Bollinger Bands. So we're trading above that. We're trading above an upward sloping 50-day, which is also within the 2 standard deviations, the Bollinger Band. And then we have a 200-day sitting around 192. That's about 38% above or below where we're sitting on the current price. So I mentioned in Microsoft that we were not as far extended as gold. Here we're extended about as much as gold. So
Excellent.
let's go back to a year. We do have an RSI that's starting to get back into an overbought condition. One concern that I have here that I'm watching is we do have a downtrend on that. So that means there's less momentum as we're getting to higher prices.
Mm-hmm.
We also have a PPO that is losing momentum as we're getting higher prices. So that is something to keep an eye on. But look at the accumulation over the past year. We're at a 52-week high. And the money flow has been positive since June the 26th. So let's see. I only see one. Just you put in an estimate.
Yeah.
Is everybody awake out there or what?
Well, I just we'll go with mine. I have a question for you.
Okay.
So looking back, buying Google Alphabet in May was a great move. And kind of like looking back, what led you to that point of buying? Kind of retrace your process so we can learn something from it.
Well, I was watching this downtrend line and it had tried to break above it. I can't remember exactly what happened on May the 7th. We took a pretty big fall there, about 7.5%. And then a couple days later, I saw it at about 154, but the prices were increasing. And I just believe that it could break above this point. So I don't know how many purchases I've made, probably 7 or 8. This one was probably pretty small with a tight stop on it. And then let me show you one other thing here, because as you've heard me say many times before, I do have a process that I follow pretty strictly. And I'm going to put together a video on this someday. I've been collecting data for many months on this, but this is the Google price. So this was May the 9th.
Mm-hmm.
It came down and almost tested this chandelier exit line here. But since I bought, I started watching this chandelier exit, and you notice that it keeps going up as well. I had one day here where it actually crossed below the chandelier exit, which would have told me to trim. I actually had a sale in on that day and it failed to execute, which was a good thing because the next day it was right back above the chandelier exit. And you can see that it hasn't stopped since the Friday, October 10th, when we had the big sell off. It dropped down below the chandelier exit again. So as long as it's staying above the high water mark of the chandelier exit, which I'm going to have to increase a bit today because I can see it's at 249.32 and my orange line is at 244. So the price is increasing enough today to raise my sell point up to 249.
Excellent.
So that's
Nicely done.
that's what keeps me in a stock. As long as it doesn't fall back through these chandelier exits, then I'll stay in it.
Very good. Very good. So, looking at the value of Google Alphabet, and I put my price target at 317 by the end of the year. I think we're
Okay.
really looking to get so the market's already really expensive and the market's going to go higher. It's just the news is like just so darn positive, right? And structurally much positive. You get rid of the China risk, you get lower interest rates, and they're going to stay low. They're going to go lower. It's just the president wants a Fed Reserve chair that is going to push rates lower. That just helps asset prices. They go up. And the strength of the Google AI business is beginning to be revealed. I always chuckle when you hear, oh, OpenAI is doing this. So then Google trades lower. And it's like, yeah, I guess like OpenAI more recently launched their browser Atlas only on the Safari operating system, by the way. And that's not it PC is more prevalent. And it's like, let me know when they get to 100 million users of Atlas, because Chrome is installed on billions of PCs and devices. They need to catch up over the next 10 years. It's not a threat. It's a threat if they were to like get maybe to 20% market share or something. Back to the stock price. I think the stock is worth 317 as I speak. When they announce on Wednesday, this valuation could change up or down. But this stock has just been on fire this year. And I think it's going to go up at least to $300 a share by the end of the year, my expectation, just with all this good news that's happening. Of course, we could always be surprised. We go around a corner and there's some negative story, substantial negative story for the economy or something that could bring asset prices down. But I think Google is really set up well. I'm glad I own as much of Google that I own. And I really look forward to Wednesday. This is going to be, of the 5 earning reports that we're going to look at, I'm focused on all of them, but Google and Amazon will tell us so much. Google tells us what's going on in stream, search, AI, cloud infrastructure. There's just so much revealed in the earnings. So that one I'm going to study. I'm going to talk about. We're going to stream on Wednesday. We're going to do a watch party on Google. I'll make a video on Google as well as Meta. for the community and release it just to community members. And it's just a fascinating company, making me lots of money. Everything's good with my Google investment. Glad I'm in it. So that is,
I have a 283 price target by the end of the year, and that's just based on the formation of this little cup here. So I'm just measuring down and then adding that back to the rim here. That gets me a 283.
okay.
And one other thing I want to mention is we had a bullish crossover in the PPO, even though it's been going negative, it's in bullish territory, and we had a bullish crossover.
Nice.
And another thing that's supportive of the price is when we did have the pullback on April or October the 10th, we still had an RSI of 47. That's as low as it got. So I'm pretty supportive of what I see with the Google charts at the moment.
All right. So looking at the stock market, it is up nicely. We've got some green on the heat map. Google's up 1.94%. Microsoft's up 1.22%. And the stocks we're going to cover in this pre-earnings, Amazon's up, Apple's up, and then Meta is up. So these big caps are up. They're moving the market higher. The market is up in positive territory. The NASDAQ's up 1.34%. The S&P's up 0.81%. So if we keep this up, it's going to be a positive October and in a very good year. This year, if the lesson needs to be told is stay invested. Keep your money working for you. Like, it's fairly early in the day. While I slept last night, my money was working. It was doing push-ups. It was doing crunches. It was lifting weights, working to expand my net worth. And that's what I want. I want my money to work for me. As Warren Buffett said, if you don't invest right, you'll be working to the end of the, to the day you die. You need to figure out how to make money while you sleep. And that's it. Kind of way of saying you want to get your money to start compounding, to really just start growing. And markets like this one we've been in 25, the market we had in 24, the market in 23 have been an opportunity to compound, but you don't see your stocks go up if you're not invested. If you're out in cash and you're like, oh man, I'm going to outsmart the whole market. I'm going to be 80% cash. Oh man, you got punished in the last 3 years. So we'll see how we go from here. We got members or attendees of the live stream bringing in some comments. Let's take a look here. So I've already noted, by the way, let me start over a little bit. So fall is great. We're going to go to DFT next. And then we're going to go to OGN has been killed. Let's see if we can do some CPR on that stock or maybe give it its last rites. And then we'll go to Mara. We've looked at Mara recently. Shadow Guy making an appearance. Good to see you, Shadow Guy. DJ, good to see you. Good morning, sir. And then Baba. Let's look at Baba, man. We have a U.S. That's a great idea, by the way, because we have a U.S.-China trade agreement. Baba's going to explode higher. Baba's been a super winner in my portfolio, so I love talking about him. All right, so let's get cracking on this list. We got 4 stocks to deal with and to take a look at, starting with DEFT. This is DeFi Technologies. We looked at this recently. Let me remind myself of what these guys do. DeFi Technologies, a technology company, develops exchange-traded products that synthetically track the value of a single DeFi protocol or a basket of protocols in Canada. The company offers asset management services such as indirect exposure to underlying digital assets, digital asset indexes, and other decentralized finance instruments. Okay, let's take a peek at their website. So this is DeFi. So I've been investing in crypto, really began in 2017, just dipping a toenail as an investment. And then I started to dip a toe in 2018. And it's been an awesome asset class for me, but it's easy for me to get lost in the crypto space, by the way. I've been trying to keep learning, and I oftentimes get lost. So if you feel that way, you are like me. Okay, so these guys are doing asset management, ventures. Okay, DJ. Okay, got it. So these guys are trying to be kind of a vanguard, but different, very different for crypto. They're trying to make products that investors can invest in, build a brand around DeFi, right? Kind of like Vanguard. I buy Vanguard. I'm very comfortable with that brand. I know those guys have been doing a really nice job for like 25, 30 years. So I own a couple of Vanguard ETFs. That's why I use it as an example. DeFi is trying to create a brand that investors feel they're comfortable with, and then they would invest. Let's take a look at their business. All right, so year to date, not so good. Down 24%, while crypto has been doing well. Let's visit crypto for a second. The Bitcoin up 23% year to date, and it's been a fabulous investment, up 732% over the 5-year. And other coins haven't done as well as Bitcoin. I would say Ethereum, because I owned Ethereum for years, didn't do as well as Bitcoin. So DeFi not keeping up with the Bitcoin. Market cap 773 million, revenue 75.79 million. So paying about a little over 10 times revenue. PE is 33. Strong buy, discounted by 200%. Wow. I don't know that I've ever seen a stock discounted by 200% on stockanalysis.com. Now, this chart looks really interesting. You see that it had that volatility, and crypto did have insane volatility in 21. We had a nice crypto winter in 22. That's understandable. And then, boy, if you bought here, you're buying it at, for pennies. Now we're up to $2.07. Okay. So their revenue is growing. It should be. Crypto is getting more and more investors interested, and other respected investors, like Tom Lee's an example. He's very respected. He's all over crypto, and others are kind of getting into this space, seeing that, hey, Bitcoin's up more than 700% over the 5-year. It's got a massive market cap now. There's a lot here. So these guys are growing nicely. So they're growing well. Are they profitable? So it's a fee-based business, and it's crypto. So it's not like, hey, I have to buy materials, have a factory, and then ship out product. Nope. It's a crypto. It's just making money from transactions that are occurring. The profit margins are good. They don't have any cash flow. No. One thing that I'm going to take a look at is their cash flow statement, because sometimes the crypto related stocks are not reported in a way that tell you the true value of it. And the main reason is when companies report their financials, they have to report using generally accepted accounting principles. And I went to college, I graduated in accounting, and that was like drilled into my head. Generally accepted accounting principles, and that accountants need to be very conservative in the way that they report, and they want comparability and so forth. Well, crypto's so darn new that they take the free cash flow statement and they don't give credit to crypto companies in some cases when they own or they create, as an example, Bitcoin. And it's like, wait a second, Bitcoin to me is the same as cash, but generally accepted accounting principles are like, nope, it's not cash. So they're technically right, but practically wrong, which is no, to me, Bitcoin is cash. So I'm going to look at their statement of cash flows, hopefully here. I'm going to stop talking so I can focus on getting you to a statement of cash flow. So this one is what we're looking for. So this is assets. Let's take a peek at this because this will be interesting. So they have digital assets of 206 million. And they're staking those assets. Okay. So here's revenues. So here are the gains and losses on transactions of their crypto. Okay. All right, this is where I wanted to get to. So here's cash flow, and it has three sections: cash from operations, cash from investing, cash from financing. For my valuation methodology, I focus on operations minus CapEx. And based on their most recent cash flow statement, so this is an unrealized loss on ETP payables, which I don't know what those are. Staking and lending. So that's where the big move ended up happening. Okay. All right. So what I'm not seeing is sometimes, and I'm going to go back to the income statement. Bear with me for a second. Do they have any CapEx here? No. Okay, so here's their income statement. I'm sorry, balance sheet. So cash, digital assets. So the digital assets went down. All right. Staked. All right. So these guys are owning a lot of digital assets, staking them, trying to make money on buying at the right time, holding, and then selling. So let's take a look. This stock is up 3% over the 1 year, down 24%. What's the forecast for DeFi? Everybody's saying it's going to go higher. So they're going higher. So this business here, right? I'm not personally interested in investing in them, and the reason for it is there's kind of like two paths, or a couple paths, I should say, that I like in crypto. First, I own Bitcoin. I hold Bitcoin. I'm going to hold Bitcoin probably for the foreseeable future. Glad to own Bitcoin. I'm also looking for businesses that are innovating on the blockchain, innovating within crypto. This is a financial services company that's just trying to make money buying and selling. Well, I'll just buy the Bitcoin. I'll hold the Bitcoin, and maybe I might buy another coin or two. Although my investments in Ethereum underperformed Bitcoin, sold that after owning it for 6 years. So it wasn't like I bought it and sold it in 6 days. I invested in Solana. It wasn't good. I ended up losing money on Solana. Small position, sold it. So this isn't my cup of tea. There's just not there. I can't, like, I'm glad we saw Microsoft and Google. I could explain to you what those businesses do and how they're intending on growing their revenues and growing their profits and growing their cash flows. I can't explain that to you for DeFi. These guys are trying to grow a business. The market isn't buying what they're selling from a stock perspective. I'd rather invest in other ways within crypto. For example, something that's exciting and easy to understand is if you use Polymarket, if you go on Polymarket and you're like, hey, pretty neat, you can bet on an outcome. They're running on the Ethereum network. That's a business built on top of the blockchain. That's awesome. That's what I'm looking for. I want the next Google. I want the next Microsoft. DeFi is not going to be that next company. If I'm going to go into financial services, I'd rather go into Robinhood. And Robinhood plays in crypto, but mostly they're an equities brokerage. So this one here, I can't add much more than what I'm sharing with you. It's not the type of investment that I can put into my model or my process all that well. And by the way, I can't put Bitcoin into my model either. Bitcoin was completely a big picture decision that I made. Hey, I think digital currencies have a future and I'd like to buy some. So I cautiously bought into Bitcoin, have held it. I started buying in 2017, but I was literally buying a couple $100 at a time. And then I increased it a couple $1,000 at a time starting in 2018. And that really grew. It grew really, really well because I kept buying, every quarter. And then I haven't bought in a couple of years because I've got enough. So do you have any comments on DeFi?
Yeah, we looked at this one a month or so ago. And I have this support resistance line sitting at 177. It found support there in March of this year, in April of this year, and it saw resistance in July of 2024. It overshot it a little bit, but came right back below it here. So that's why I have that line there. Oops, I didn't mean to go to 1 month. You can see where I think it's going, about 177. It's in a confirmed downtrend, the 200 days declining, 50 days declining, 20 days declining. It's below 2 downtrend lines as well and looks to be working its way back to support at around 177 or so. The accumulation distribution has been in very heavy distribution since September the 19th. Money flow has been negative for the most part since June of this year.
Thank you, sir. So DeFi, I think the crypto space is going to be interesting to watch. But again, I'm watching from two different perspectives. One is store of value. I don't buy gold, I buy Bitcoin. And then the second is, where's the next poly market coming from? Where's there really going to be another business created? I'd really like to be a part of that. All right, let's turn our attention to Organon, because I feel like I opened this up and it felt like I drove up to the scene of an accident. You know, like you come up to an intersection and unfortunately 2 cars collided and there's people injured. And I'm like, oh man, it's unfortunate that that happened. And okay, the paramedics are there. Perfect. The stock's down 21.56%. What happened? Holy smokes. These guys missed a light and got smashed by a truck. This stock has not worked. This is a spinoff from Merck, if I remember correctly. These guys develop solutions for women's health. Now, conceptually, I think it's a good idea. Like, hey, obviously, women have health needs, and you could probably grow this business quite well. But man, this thing's just been a loser. Has a small dividend and just has gone down and down. It's a small cap, $1.89 billion in market cap. Revenues is $6.28 billion. So the market really doesn't like this business to the point where it is selling it for only like less than a third of its revenue size. PE ratio is down to 2.75. We just saw Microsoft at 38 or 30 something. And forward PE of under 2. Whew, man, brutal. Analysts claim that, yeah, this might be discounted. Now, the revenue is not collapsing. So I would say, okay, well, the stock price is collapsing, but the revenue is not collapsing. Are profits collapsing? Free cash flow is collapsing. So the profits are here. No, gross profit looks okay. Free cash flow, distinct free cash flows. They could start to grow. This business is worth $6-7 billion. Easy with less debt. We'll see how much debt they have. That might be a fly in the ointment, something that spoils the stew. 56.57 gross margins. They are profitable, generating free cash of 10.48. Okay, let's take a look at debt. Maybe that's where we're having problems. Maybe that's a red flag. They have $8.9 billion of debt. Okay, that might be a problem. Debt to EBITDA 5.11. So this balance sheet is not good. So 5.11, when you look at debt to EBITDA, EBITDA is earnings before interest, taxes, depreciation, and amortization. It's kind of like saying, hey, when you buy a house and your household, income, let's say you and your spouse or partner make a certain amount of money and you're like, all right, let's buy a house. Cool. You bought a house. You're going to be paying that house off. Well, they're only going to lend you what you could afford, right? Because it's going to be a big part of your income. And these guys, if they were to focus all available earnings before interest, taxes, depreciation, and amortization, it would take them more than 5 years of just isolating all available resources to pay off debt. That's too much. You'd put the business on hold completely for more than 5 years. Your competitors would leapfrog you. They would put distance between you and where they're going because you're so handicapped by debt. That's the big problem with OGN is I can't invest in a company like this. It's too risky. This debt is going to hold them back. They may have really good ideas for women's health. They may have really good ideas. Hey, we can create this drug down the road. Well, yeah, in your mind, but right now you have to pay off this debt. You are not going to move off this debt. Now, lower interest rates is going to help them. If somehow, either by, talented leadership, they can start growing and expand their margins, they can get there. But their cash flow at $600-700 million in free cash flow, it's going to take them geez, 8 years to get back to a very solid balance sheet. So this one here would not be an investment I can make. That balance sheet is it's like you're playing Monopoly and you get that go to jail, directly to jail, do not pass go, kind of message. That's what I'm getting here on Organon. Do not invest, do not invest, do not invest. Move on is what I'm getting to on OGN. Any comments on OGN?
Chart saying the same thing. So today we're reaching an all-time low. We've been on a downtrend since the 26th of August of last year with really no hope in sight. Downward 200, 20 days crossing below the 50 today, which did seem to be increasing, but it's turning over as well. The RSI is in the basement. PPO is in the basement and getting worse. And the accumulation distribution started at this high. When that high occurred, that's when people started moving out, and they've been moving out ever since. It's not a good looking chart at all.
Yeah, let me just tip my hat to Mike for bringing it up. It's easy to bring up all the winners, but the ones that are struggling, it's important to go over. And I would say some of my losers, like I lost my shirt on Intel. Didn't lose a lot of money because it wasn't a big position, but I like going back on the stocks that maybe didn't work, maybe were pretty good losers. And there's a lesson to be had there. And I would encourage you, although it's hard to kind of go back and kind of revisit, okay, what was the process? How did I veer off my process? And it's important to do that. So, good luck going forward. Qualcomm, man, you guys are catching my attention. I'm almost skipping ahead, which I'm not going to do. We're going to move to Mara, but I can't wait to look at Qualcomm. Qualcomm is on my list. We're going to look at Qualcomm in a bit. Mara, up 3.22%. You guys woke up with crypto on your minds. Mara Holding operates as a digital asset technology company in the US and Europe. It also provides technology solutions to optimize data center operations, such as liquid immersion cooling, firmware for Bitcoin miners. The company was formerly known as Marathon Digital. So this is a miner. Okay. Now, I never got into miners because I should say I dabbled a little bit in Bitcoin miners, but not a whole lot. This one's up 20%, 18%. Okay. $7.47 billion in market cap. Revenue, $800 million. Okay. PE, 11.62. And the forward P, 33.5. Growth looks very, very good. 41% growth, 69% growth. This is the trailing 12 months, last full year. Okay, so Mara. Let's take a look at their free cash flow. They're burning cash. They're probably building that data center, buying GPUs so that they can make their data center bigger, stronger, faster. Gross margins look good because they're able to capitalize all that CapEx and put it in the data center and make some money. Generally accepted accounting principles are in play. And their profit margins, 85%. Maybe because Bitcoin's going up and they're getting kind of a really nice payment on, or I should say, realization of profit on Bitcoin. That looks really impressive. Wow. So, man, this business has some really good looking numbers. Forecast, 12 analysts cover it. Boy, They are all over the place. It could go to 30. It can go down to $9.50. And it's expected that their growth is going to slow down, but it's still going to be very respectable next year, 24.4, 13.2. Okay. And I don't think they have much debt. Let's take a look. $2.5 billion of debt. I'm glad I looked at this. Debt to EBITDA, 2.17. So as you look at data center companies, CoreWeave, this company, Mara, Nebius, if you look at these businesses, keep an eye on debt. That's how they're able to grow their data center operations. But just be aware of it. I don't know how you invest, right? My investing methodology, I want good balance sheets. I don't want bad balance sheets. So I watch the balance sheet, and these data centers are, in some cases, accumulating a lot of debt. It become risky. We have a pause in the AI build out or usage of data centers for AI. Those companies are going to have debt payments on their hands without much income coming in. It's going to get really, really scary for those businesses. All right, so let's take a look at let me flip it over to you for the charts, and let me try to find their income statements themselves. Can you take a look at Mara, please?
Yeah, we looked at this one before. And I have 13 years worth of data pulled up here, which they have been in a steady decline for 13 years from their peak.
They've been around for 13 years.
According to the data here, they
Amazing.
started in February of 2012. They were probably a Bitcoin miner.
Yep.
Okay. In 2020, they did start back on an uptrend. So that's this blue line. And this top red line is this 13-year declining period. And then on this one, we have a shorter term downtrend that started in 2021, which it looks like we're starting to break out above that right at the moment. So let me just go to 1 year. Oh, by the way, look at the distribution, which started in 2023. A lot of distribution after accumulation at all-time highs for 10 years or so, 9 years. Okay, so let's just go to 1 year now. Yeah, we can see that they are trying to break out above this. So I could extend this out. I'll do that after the stream. But it did hold that on this recent pullback. So if it can continue, that would be a positive sign. The RSI is positive at 54. The PPO is also positive. We did have a bearish crossover that hasn't resolved itself yet on the 17th of August. The histogram bars are getting a little smaller here, so in a few days we might see a bullish crossover in bullish territory. Our distribution's a little concerning because it's been on pretty steady distribution for this year.
Thanks,
That's all I
Daryl.
have.
Yeah, thank you. So I don't have Mara. I have Marathon Petroleum, but I don't think we're talking about petroleum. We're talking about Bitcoin. And the best I can offer is, I think this business is operating as intended and as expected. It's not a business that I would like to invest in, because if I'm bullish on Bitcoin, I buy Bitcoin. as mentioned, I would be very interested in businesses that are creating organic new business on top of the blockchain. I think that's really interesting. But a minor, there's just too much expense going on. If you look at how much these hyperscalers have to spend in GPUs, the power, these guys are tiny. Are they going to be pushed out by some of the big giants like AWS? So this one here is it's your comfort level in Mara, and I don't know what my guess would be if these guys are going to go up or down. If we look at these guys, it'd be interesting to take a look at. Here's the Bitcoin, and let's compare it to Mara. So Mara's more volatile. Back here, it was far more volatile than Bitcoin. Now they're kind of trading with one another. This is the 5-year. And then if we look at the 1 year. So Bitcoin's actually outperformed Mara by a wide margin. And I feel like the Bitcoin would be less volatile, less risky, because you're buying what is a sellable asset. You can sell it 24 hours a day, 7 days a week if you wanted to. Mara, you may be like, oh no, it's selling off. I don't want to sell it. So for me, it's not the right investment for me, but those are all the comments we can lend on Mara. Thanks for asking. All right, let's keep chugging along here and turn our attention to Alibaba. This is the Amazon over in China that has what I think is a very good position in the AI world in Asia. They are providing a lot of cloud infrastructure to companies that are building AI solutions for that region. That region's massive, lots of people, lots of consumers. They make lots of money. So Alibaba is in a good region, good place. And they're a $398 billion market cap company with revenues of $140 billion. If we see a trade agreement get inked, it gets signed, of course, they'll probably have some kind of ceremony. President Xi, President Trump would be photo op. They'd probably shake hands. This stock's going higher by 10%. Just on the news, like, oh man, Alibaba isn't going to be kind of held back by tension between the US and China, excessive tension. There'll always be tension between the US and China because it's a two world economies that are kind of trying to posture and position against each other. P ratio 20.7, forward P at 24.68. It's a little discounted with a strong buy. This has been an excellent stock for 1 year, year to date, up 110%. You could have doubled your money, bang, in 2025 with Alibaba. This has been a stock that's had given opportunity to investors to buy. Hey, buy me, buy me. I have a strategic business in China. Hey, buy me again. You know, the stock can only tell you so many times, hey, strategic business, China, I make lots of money. So they are, and this is in the Chinese currency. I think it's, rather than guessing, let me take a look at the old conversion. And it's 0.14. So when we look at this, this is about $140 billion in revenue. And growing, but this kind of doesn't tell you the whole story. I think the data center is growing really fast, and they're a Chinese-based company. So when you think about like AI is being built, it's being built in the U.S., obviously with data centers here in the U.S., but everything that's being built in Asia is probably going to be built in Asian data centers run by Asian companies like Alibaba. And these guys are going to grow really well there. They're profitable. Their financials this year are okay. They're not stupendous. You see the cash flows come down. They're putting a lot of money into their business. They, like Amazon, are really focused on how are we going to become really valuable 5 years from now. Not necessarily 5 days from now, 5 years from now. So I'm a believer in the company. I'm a believer that, hey, that strategy is the right one. You're the leader in Asia. You resemble Amazon in a lot of ways. And I'm bullish both on Amazon and Alibaba. Analysts are divided on where the stocks can go. Will they go to 240? Will they go to 135? The forecast, look at this growth. So they're in a little bit of a slow growth pattern, but then they're going to start growing faster. So that's good. And profits are going to really expand. That's really good. Now we get a lot of these tariffs out of the way. I think it's going to unlock some growth. All right. So I'm going to skip ahead and show you my evaluation of Alibaba. I haven't bought shares in Alibaba in a little while. I bought them in the last 12 months, but I've just kind of been sitting back and letting the market take this stock higher for me. I use a higher discount rate. It's a Chinese stock. I think it's discounted by 10%. Happy to hold Alibaba. I love the positioning there. Most of my investments are with US-based companies. Happy with that. But it's also good to have Alibaba for Asia. I also have Futu, and I have a small ETF position investing out there. I also own C Limited, a tiny position. So Alibaba getting it done this year. Nicely done. And if we have that trade deal happen, this thing's going higher. What do you think, Daryl?
Yeah, it's set up pretty nicely. So the 20-day is leveled off here a little bit, but it's forming a cup shape. So that's a nice sign. Today it is trading above the 20-day, an upward sloping 50 and an upward sloping 20. Looks like it's trading about 43% above its 200-day moving average. The RSI is positive and improving. It held an RSI of 42 on this recent downtrend. That's a good sign. The PPO has been going negative, but it is still in bullish territory, and I suspect within a day or two, if this price action continues, that we're going to have a bullish crossover in bullish territory.
You heard it here first, folks. Crossover, bullish crossover.
And the distribution had gotten down to the 52-week low at the end of August. I don't remember exactly what all was going on at that point, but it definitely has improved since, getting up to at least a 10 or 11 month high in September, and then has been trailing off a little bit. The money flow is currently negative. So those are a couple drawbacks, but there's a lot of positive signs that I'm seeing here with the chart structure. It looks pretty constructive to me.
Excellent work, sir. Thank you very much. I'm going to keep moving because we've got an audience that is bringing it today. We got more chat, more requests. So Qualcomm, isn't it beautiful when a stock goes up 17% in one day? It's a beautiful thing. It's like a nice sunrise over the Atlantic, or if you're in Hawaii, over the Pacific, which I've seen. And this is really, really a good day for Qualcomm. What's the news? I heard, okay. So I guess they're in the data center. And Qualcomm is kind of on the outside looking in, right? These guys have been a phenomenal communications-based semiconductor company. And if you pick up an iPhone or a Samsung device, or I'm not sure about the Pixel, but you got a lot of Qualcomm technology in your hand. So I always thought that was bullish. Analysts think, well, this thing's getting expensive. I disagree. In fact, let's just pop over there right now. I've been saying this for a while that Qualcomm is discounted. It's got awesome cash flows. It's discounted on their profits, and it's still discounted even as it trades at $198 per share. I think it's worth $301. So I'm not with the analyst. The analyst, I happen to have a theory, unproven theory, that analysts will kind of follow the general kind of sentiment because they don't want to be too far out of, the pack. Where I look at valuations, I look at numbers, and the numbers kind of lead me to where I'm going to put a price target on a stock. I just showed you my research. So these guys, what do I like? I like revenue growth. Perfect. Well, they got it. I like profits. All right. Got good news for you. These guys have good profits. They have good net profit, and they have very good cash flow. So the only problem they had was they were not in that data center. So if they're beginning to kind of claw their way into that data center, the market's going to change their whole thinking around Qualcomm. Like, wait a second. Now the Snapdragon chip, I have it in my Samsung device. It kicks butt and takes names. It's fast. It also manages power really well. My new Samsung, well, it's not new anymore. I got it, let's say 5 months ago. Yeah, 5 months ago. And the power consumption compared to my iPhone, there is no comparison. The Samsung's way more efficient. I do far more on my phone. Like the iPhone, if I did any kind of like heavy workload, power would be gone. So these guys' forecast is divided among analysts. They have a decent balance sheet. Great to see Qualcomm. Have a good day. I've got a pretty nice little position with these guys. I don't know if I own 40 grand, but 17% on 40 grand is going to look good. What do you think of Qualcomm, Daryl?
We've been following this one for a while. And back in the end of August, I put a price target of 170 based on this cup and handle here. It came within 50 cents of that price on September the 24th. And then the price target here looked like about 194. I didn't expect them to hit it in one day. We're actually at 197 at the moment, but the prices are pulling back a little bit, but that price target was hit in one day. So I don't know where the next one is, but this looks pretty good today. The RSI looks like it's actually surpassing the last time we hit a high. That's a good sign. A lot of times you see the momentum kind of slow down. This looks like the momentum is actually picking up. And the PPO was in bullish territory, and it is getting very bullish today. And the accumulation distribution is almost at a 52-week high. It looks like we had a little bit of trail off this past day or so, but that's at a 52-week high, and the money flow is positive at the moment. These don't update till the end of the day, so we're not seeing those updated based on this price action because they need to know the volume at the end of the day.
Excellent work. Thank you, sir. Let me catch up on comments here. We got a pretty active audience today. And guys, if I miss your comment, I'm sorry. If you're a member and you put in there like a request or something and I miss it, I'm sorry. I've done that a few times over the last couple months, and I apologize in advance. we're just, as you can tell, we're pretty busy, and I try to read every comment, make sure that we're covering it. So we are going to move a little bit fast because we got 30 minutes to go, and hopefully can cover 3 more stocks, and we'll see how many more. Falls Grave, SPT. SPT. We will cover that. And then, all right. Qualcomm stock soars. Beautiful.
What's interesting is NVIDIA is up as well. Normally, NVIDIA pulls back when there's competitive news, but they're up today as well.
You know, the way the market's pricing semiconductors is enough of this like farming, you know, for food. We're going to give up on that because we don't need it. Enough of this water, clean water. We don't need that either. We just need data centers with high performance semiconductors. That's all we need to live. Oh, wait. I think I just made a terrible joke. All right. So let's keep moving. It looks like SPT was requested. Let's handle that real quick. And then we're going to try to handle Meta, Apple, and Amazon. Okay. So I got to leave Qualcomm open because I'm going to enjoy that. I'm going to take a look at it from time to time today. I don't know if you guys are gardeners, but my wife and I are. I should say my wife is, and I'm the laborer in the equation. But I do appreciate when we have blooming flowers. And this is a beautiful bloom. This is the kind of bloom that I like to see, where my wife likes for me to fertilize the soil, till the soil, all that good stuff. And then we get these blooms that are really beautiful that last, I don't know, a week. All right. So Sprout Social designs, develops, operates web-based social media management platform in the Americas, Europe, Middle East, Africa, Asia Pacific. The company provides cloud-based software for social messaging data workflows in a unified system of record, intelligence, action. It offers AI-powered solutions such as publishing, scheduling, social customer care, reporting. We've looked at this stock. Sprout Social. So, okay. So you're a corporation, you want to see if your posting and so forth is getting the eyeballs, the clicks, the kind of online success that you would like to see. So you use the Sprout Social platform. This is a tiny cap, $664 million. And revenue, 430. So doesn't look all that expensive. It actually looks like a good deal if this is a good business. Forward P 14.8. Man, that's a very good forward PE. Analysts say, hey, discounted 145%. Whoa, what's going on here? Stock market's treating this like it is not a stock that should be in anybody's portfolio. Let's make our own decision here. Now, this stock chart looks like, man, this business is really just on its last legs. Customers aren't buying anything, but the first impression is, no, customers are buying stuff and they're buying more of it, 14.79% more of it, more of their services and so forth. They also have very good profit margins. That looks really good. When we look at their gross margins, very high gross margins, cash flow, and they're not profitable yet because they're really small. But if they're generating that cash, I'm good. I'm good because that means they're going to continue to get larger. It'd be nice to see them grow a little faster because they're tiny. And it's important for them to get bigger. Balance sheet I'm expecting is going to be fine, but let's take a peek. More cash than debt. That's what we want to see. We don't want to see like a lot of debt. That's a big problem area. All right. So I think SPT is a valuation that I've got handy. We will soon find out. And as many paid members, no, I don't have it. SPT is not in there. So I don't have a valuation, but I would provide the comments saying that this business is a good opportunity if you believe in the business. Now, there's a lot of companies in this space, I would say. You have AppLovin is probably the one that's crushing everybody else. You got 20 companies that are trying to do this. Okay. It's not a new idea. So it's going to be competitive. And if you really believe in this business and feel like, hey, they do this particular area better than anybody else, that might be a reason to be interested in them. For me, I'm good with AppLovin. I think that's the market leader. I own Meta, big time, and I own Zeta, and I own Pinterest, I own Google Alphabet. I mean, I'm all over this space. No need to convince me that I think this space is great. This one here is a good little company. Couldn't argue with an investor getting into it. I would just say, do your homework. Your qualitative decision making is going to be critical with the stock. But hopefully, if you do invest in it, I hope it really delivers great returns. Right now, the market's like, yeah, we're going to pass. We are not going to invest in this tiny little business. Maybe the market's right. Maybe the market's wrong. All right. We're moving along. And one comment from Peter. I think the cryptocurrency companies are a reasonable investment only after the cryptocurrency sell-off. Well, Peter, I would, and maybe we could take this on the next investor call, but if that's the train of thought, I would actually be better off buying Bitcoin, because then I'm purely buying the store of value and I'm going up or down as the market trades. And I'll just buy Bitcoin on low points and just follow that investment, go higher. But that's the lane I've picked within crypto. These companies that mine Bitcoin or do other things, it just creates more complication to what inherently is my investing idea, which is, hey, I want to store value in Bitcoin. And that's where I go. Thanks for the comment, buddy. I always like seeing you on streams, and I always like talking with you and everybody else on the member calls. All right, let's get back to these massive caps. We got to talk about Meta. We got to talk about this company that offered us this beautiful stock price of $86 per share. This doesn't show it right, but intraday was down to $86 a share. The market was just, pounding the door in 2022, telling me this is opportunity pounding on your door. Buy Meta. I did buy Meta. Now I'm a dollar cost average guy, but I bought Meta. I still remember talking to Scott with Scott's Due Diligence, the other YouTuber. And back then he's a big Meta investor. I'm a big Meta investor. And we were like, God, the world's freaking nuts. How could it price Meta this low? This is the market leading social media company, right? And the rest is history. So this one here has just been a freaking awesome stock. And this year it's delivered the goods. It has gone up 28.7. I'm an investor, got no complaints. PE ratio still is at 27.3. Next year's PE 26.3. Analysts think discount of 9.59. I'll just go ahead and show my discount at this point. It is different. And it is 36% discount on Meta stock. Whoa, very different. Why? Cash flow, profit. I think the stock's worth $1,170 per share. This Meta is one of one. No other business is like them. Over 4 billion people each month log into a Meta application. I log into multiple. I use Facebook. I have relatives that love WhatsApp. So I have to get on WhatsApp. I have to get on Instagram because I have other relatives that love posting pictures of these little kids they have on Instagram. Well, here I am. I'm chasing my family around using Meta applications, and I'm in it for the long haul with my family. I'll be using their apps for the rest of my life, it would seem. So these guys just have a really, really, really good durable business coming up on $2 trillion market cap. Look at this growth. Big, big business, 178 billion with 19% growth. They are doing some exciting things. What is become really exciting are these, as silly as it sounds, the Meta AI glasses are pretty darn cool. And they're beginning to have more use cases for those glasses. They're growing at 19% on $178 billion business. So you're growing nearly $40 billion in top line revenue each year. That's phenomenal. What is also phenomenal is 82% gross margins, free cash flow of $50 billion while they're just pouring money into the data center, trying to be an AI company. They're still able to produce 39% profit margins with 28% free cash flow yields. Phenomenal. That's why we want businesses like this. They can deliver awesome performance on a cash flow and profit basis while investing in these big ideas like AI, their AI glasses. It's just a really, really special business. One of one. Some analysts are with me above $1,000 price target. Some analysts are like, oh, it's a little expensive. $600 a share. And look at their growth. They're going to be a $300 billion revenue company in 2028, growing in the teens for a while, expanding their profits. And I think if the AI thing, if the AI universe becomes this big business, I think Meta is going to be one of the few businesses that's really going to capitalize on that. So not only am I getting an appreciating investment based on fundamentals, but I've got a front row ticket to what the AI universe is going to deliver from a business perspective. I think AI is going to have a very desirable, enviable position to enter the AI paradigm with its business because it has over 4 billion people logging into Meta. So they can introduce a Meta app, Meta AI app to 4 billion people. Huge competitive advantage. Who else? There's only a couple companies that could rival that. Google Alphabet being another, maybe Amazon being another. After that, the list kind of really shrinks. Not a lot of other people have the kind of exposure that this business has. What do you think of Meta, Daryl?
Well, they haven't done much since February, except for a lot of volatility. They're trading about where they were at their February highs. They did drop below that in the last month or so, but today they're trading above their 50-day and their 20-day, which were declining. The 20-day is turning around this morning. The 50-day probably going to take another day or two for it to start turning around. The RSI is in positive territory at 59. We had a bullish crossover in bearish territory on the 17th of October. The accumulation distribution is slightly higher. Let me go to February. It's lower than it was in February, higher than it was in December. So it's kind of holding its own. The money flow is in positive territory. We are starting to see strength build as we move into earnings, so it'll be very interesting to watch this one when they report later this week.
Yeah, we will definitely see what they have to. I of the earnings that we are expecting, the one that I think could be the most optimistic is going to be Meta. I think and Meta doesn't have a history of being overly optimistic on earnings. They won't be like, pom-poms out and everything. Just when they put out the numbers on their platforms, the market's just going to realize, man, these guys are so ahead of everybody else in engagement of human beings on Earth. They have, if you measure, 50-50, right? There's 7 point something billion people on Earth. Over 4 billion of them are touching a Meta app. That's incredible. It's like, wow, yeah, that's a lot. So I think that one can really impress. And I think the market knows they've been spending like drunken sailors, not to say anything just demeaning about sailors, on AI. So we'll see where they announce. It'll be really interesting to see. All right, moving along. And one last comment on Meta. Benton 3524 sold Meta this summer, rang the cash register, and owns it through an ETF. Thank you, sir. Thank you, Shadow Guy. Good question on debt to EBITDA. That is a ratio. It doesn't matter what interest rates are doing. All right, so let's go over to Apple. What's going on in the universe of Apple and its devices? It's up 1.28%. Year to date, it's up 6%, which was a lot better than when it was just kind of, just dogging it. $3.9 trillion market cap with $408 billion of revenue. High PE ratio for a slow grower, but that's their revenue mass. I get that, but PE ratio of 33.8. Analysts are beginning to put a little doubt in the Apple, and I'm not sharing my screen. Look at me. So let me kind of rewind a little bit. Apple is down 6%. Analysts are beginning to, be concerned about the stock price. I don't think, it's a secret that this slow growth, you see some of their contemporaries really grow and jump on top of some themes that have been really exciting, most exciting being AI. Apple was slow. Apple was slow to jump in. Now they're kind of trying to borrow strategies from, they're borrowing a strategy from OpenAI. They're borrowing strategies from others. And we'll see. We'll see if the market punishes them. But they have to keep growing. They don't grow, this stock's just going to suffer. Now, the growth they put up on June 28th was pretty darn good. 9.6% is very good. So good job there. They are a profitable entity with good gross margins. They are a device-oriented company, so they do hardware. And this is the cash flow, man. Monster cash flow. So their cash flow yield is why Warren Buffett loved Apple. So the story on Apple is going to be, what's their growth? What's their strategy? Now, some things I don't like about Apple is they got to where they're at by being incredibly innovative on product. They took what BlackBerry had, and previous to BlackBerry was probably, I don't know, somebody else. And they reinvented that product and came out with iPhone. Genius. Well, that was a big moment. They've had other incremental moments on top of iPhone. What's the next big idea, everybody? Like, if you look at Google, there was search, YouTube, big idea, cloud infrastructure, big idea, robotaxi, big idea. They're delivering big idea after big idea after big idea. Apple, not so much. And that's, I think, my biggest concern. They're not being run by a founder, because the founder's the main one's deceased, but it's more of a business operator. And man, if you're going to run a McDonald's, yeah, go for it. Get a business operator. But if you're going to try to be a technology company playing in this fastly evolving, fast innovation environment, you better have somebody that really knows how to innovate, really is creative in creating technologies that are the next thing. And you create the next thing 5 years before the thing becomes super popular. And Apple's way behind, in my opinion. The valuation of Apple, and I've been kind of, politely doubting Apple for a while. I think they're priced 36% too high. I think they really do need a good solid haircut, or somehow they need to show that, hey, we're a super innovative company again, which I don't think is going to happen. So those are my comments on Apple. What are you seeing on the charts relating to Apple?
So they floundered most of this year. They peaked out in December of last year. We had the tariff announcements, which really brought them down, but they were declining even ahead of that. They did reach those highs again in just a week or maybe 3 weeks ago. They are hitting an all-time high today. Their RSI is not overbought yet. Their PPO is in bullish territory with a bullish crossover today. Their accumulation is at a 52-week high, and their money flow has been positive since the end of August. So the setup is looking really good moving into earnings. They're definitely showing some strength moving into earnings. They report Thursday, right?
Yes.
Okay.
Very interesting. Thank you, sir.
I do expect their earnings to be pretty good this time.
Yeah, I mean, the last earnings was really impressive, I must say. That type of growth is excellent. So if they can keep that up, man, look out. All right, so let's go to Amazon, and I think we can kind of well, I've got one more request that came up, NBIS, but comments that I wanted to cover. Amazon, and let me start off by saying this is a stock that I've been buying and I think is a really good opportunity, because Amazon, if you understand Amazon and how culturally they're put together, you understand that they don't treat their stock price as the compass or the North Star that they will follow. What they treat as growth, how they're becoming more important, how they're winning the overall strategy versus any individual game that's being played that week, that month. And for me, Amazon is all the doubt is like a great situation. We're back to Meta, buying Meta in 2022, Google earlier this year. It's like, man, this market just keeps knocking on my door with opportunity. That's how I feel about Amazon. This is a $2.4 trillion market cap company with $670 billion. These guys are going to be a $1 trillion revenue company in the next 5 years. P ratio is a little high because profits are down. Analysts agree with me that it's discounted. And this stock has not performed this year. It's up 3.38%. And over the 1 year, it's a little better. 5 year has not kept up with its peers. Meanwhile, it's just become more and more important, loaded with excellent businesses. Its revenue, most of it is from e-commerce. And they are not standing still with their e-commerce business. They're massive, and they've put over $1 million of robots into the operations of their warehouses. And on the member call, we were like discussing it, and the question came up, and we kind of dug into, where's Amazon getting all these technologies? And of course, they acquired some businesses like 10 years ago that were robotic businesses. These are real robots that are being used by Amazon. So just think about every other inventory use case, whether it be a manufacturer. Amazon can sell these robots if they're not competing against Amazon themselves. They can do a lot of things with that. But most importantly is they are basically, it's the place where consumers are buying goods. Amazon's just become so powerful. and they are really putting Walmart into a very, very limited position in the market. Profits are good. They also have the biggest cloud business. And it's what's interesting is they didn't dive in headfirst on the AI frenzy, which may be a genius move, but temporarily maybe a an area of concern for the market. We'll see how it plays out. Free cash flows are down because they're now investing heavily in their e-commerce business as well as the data center. But this business also has robo-taxi. They have a streaming business that's done really well. Just overall, this is a business I want to own. I don't see me selling any shares for the next 10 years. I think this business, I want more of it. I want it to be one of my top 4 positions. I'm trying to get there. If the market can help me by moving the stock higher, that'd be great because I've been buying. This has been my number 1 capital investment in 2025 is Amazon. So, and then C Limited came up. Okay, I'm going to write that down. So Amazon's been where I've deployed most of my capital. I think it starts with qualitative kind of looking at the marketplace and seeing which company is going to do the best going forward, right? And which one is strategically positioned to really dominate in the future potentially. And Amazon is discounted as I speak by 28%. So I'm getting a discount based on what I think their future cash flows look like and what I believe their profits look like. And I think it's just a terrific business to own when it's being doubted. Just count it out. And once the market realizes, whoa, this is like a really important business and starts buying it up, it's going to help me get Amazon up there on the value within my portfolio. So that's my overall review of Amazon. I look forward to their earnings on Thursday. It'll be fascinating to look at the details of it. What do you think of Amazon, Daryl?
So their price peaked out on February the 3rd, and that was about 16 calendar days before the S&P 500 peaked out on February the 19th. They have come back and tested that price once back in September. They're currently trading above an upward sloping 20-day that had stopped declining about 4 days ago and is now turning upward. The 200-day is still declining, but that should reverse as long as they can keep the prices above the 200-day moving average. So it looks like they're just 4 or 5% below their all-time highs. And if I bring this down to maybe just 3 months, we can see that since they bottomed out here on the 17th, that they've been up for all of 1 day. And it looks like they're up about 6% since October the 16th. So they are showing strength going into the earnings. The RSI is not overbought, but it is above 50 on this price run. The PPO is in bearish territory, but we did have a bullish crossover 4 days ago. And the histogram bars are getting bigger, meaning that these two moving averages are getting further apart. The shorter day is on the top and the longer day moving average is on the bottom in red. Let me step back out to a year. I think even on 2 years. Yeah, the accumulation is at a 2-year high. So even though it had all this volatility, even here, people were buying it up like crazy. The money flow only went negative for
the great Warren Buffett started a position in
days.
Amazon.
Yeah.
He just
So,
started it like in the last 12 months. So,
oh, okay. The money flow is positive. So I think they're set up pretty nicely. We still have room to run here, given that the RSI is only at 55.
excellent.
So I also bought some Amazon today.
It's a big week. We got 5 massive earnings on our hands this week, and we've got a bunch of other earnings, by the way. There's like 25 other stocks we could say, oh, United Healthcare, hey, Visa. Those are huge. Eli Lilly, those are huge businesses, but it's such a big week with 5 massive companies that they overshadow these other companies. Now, it looks like Benton is in Nebius, just a huge success story for the 1 year, up 500%. This is a data center company providing high performance data center services, servicing the AI needs of the world, especially in Europe. And these guys are $30 billion in market cap. PE is a little high. Analysts think it's a little expensive. And these guys are just exploding. Just a lot of customers want their access to their equipment. And for now, it's working great. Where's it going to be in 2 years? I don't know. But for now, enjoy the gain. Enjoy the gain. And I don't think I have a Nebius valuation, but let me just congratulate your success on that. Whoever saw this coming, I think you deserve that beautiful appreciation. I would probably price this way below its stock price, because when we look at a business, I'm trying to establish where are they going to be over the next 5 years, because I do a 5-year forecast, and I just can't forecast their business as it competing against the giants, AWS, Google Cloud, Microsoft Azure. You're going to have your hands full if you want to grow. If you want to become significant, you're going to have to deal with those big, massive, well-capitalized businesses. But we'll see where it goes. Good luck with Nebius. Any charts that you have on Nebius?
What's the ticker?
NBIS.
Yeah, I think we looked at that earlier in the live
We did.
stream.
That comes up quite a bit because it's just been such a rock star stock. And I know that Benton owns it, and a couple. I know one other investor that is a part of the community owns it. So they've have done great with it. Man, look at that chart.
Yep. So it's trading above the 20-day today after falling below it on the 17th of October. It did test the 50, but didn't break the 50. So that's good news. That's upward sloping. Then 200's upward sloping. RSI is just above 50, so not in overbought territory. The PPO is positive, and the difference between these two averages is getting smaller, so we'll probably have a bullish crossover here in the next few days. Accumulation is down slightly from its peak, but has turned around and starting to increase. The money flow has been negative for the past week. It looks like it's setting up fairly well.
Yeah, it looks great. It's been a super rock star, great winner. All right, looks like we're going to get to the end here. C Limited. C Limited is the one stock in Asia that I am currently buying shares into. Like I'm accumulating more shares into C Limited. Let me tell you why. First, this is a company that isn't quite like an Amazon. They do e-commerce. They do a lot of digital media. It's a unique company headquartered in Singapore and doing business predominantly in Asia, but they also service other parts of the world like Latin America. And this is a $95 billion business, revenues of $19 billion. P ratio is a little bit high. Target price is high, according to analysts. The growth rate is exceptional. This is a pretty good sized business, 34% growth, and it's accelerated. You see this acceleration. They're doing something that the world is really noticing and using more of their services. That growth looks fantastic. So I really liked what I saw. I included this on one of the videos I created months ago and started to buy into the stock. And Free cash flow. Look at this cash flow. That's what I like seeing, is a growth in free cash flow. They are an e-commerce business. So you don't have giant margins, but they have good margins. And their growth is what I really like. And I also like that they're in Asia, good exposure to that region. 12 analysts cover it. Best case scenario, an analyst believes it can go to 230. An analyst believes this thing's priced too high, but consensus is it's discounted by 13%. It's going to continue to grow into the future. I like seeing that. I like the growth of profits really explode. Look at that growth in profit. And this is a stock that if we have an agreement between the US and China on trade, it's going to go up. It's up 4% today. Year to date, it's up 51%. And I think it's discounted by 51% as I speak. I think this stock's actually worth $325 per share, but it's currently being sold for $161. So I gladly buy shares into C Limited, excuse me. On a day like this, I'm not going to buy any because it's this, the market's doing the work for me. My investment in C Limited went up by 4% today. Thank you, stock market. I like when you do that. If you can do that more often, I'd appreciate it. What do you think of C Limited? Do you have any comments on that stock?
And we can look at the chart real quick. So it's been on a primary incline since about the beginning of 2024. I was looking at a 1-year chart and decided to zoom out to 3 years because it's getting close to its 200. So I wanted to see how it acted when it got close to the 200. And it looks like that provides really good support. So if it comes anywhere close to that 200 again, and you believe in the company and what they're doing, that would be a really good place to get in because it does find support there. The RSI is coming out of oversold territory as of the 15th of October. It did run up to about 35 and then pulled back below 30 again, and now it's sitting at 37. The PPO is negative. It looks like the delta between the two moving averages is getting smaller. And we're looking at 3 years chart here, and they hit their peak accumulation on the 9th of October. It is trailing off slightly now. So keep an eye on that money flow and accumulation distribution line and that 200-day moving average, and see what happens there.
Thank you, Daryl. All right. So one more, and I'm just going to comment on it and then we'll conclude. So Mike had a question on any thoughts on why ELV isn't recovering much. So ELV, I was an investor, but then got out to buy United Healthcare. And before that, I was a United Healthcare shareholder for years, and then got out of that to buy into ELV because ELV had just a far better discount. But what I gave up was the brand. United Healthcare is the biggest. They do things really well. I know that they've had a tough year, but it's a really well-run business with a great brand in corporate America. And this chart I'm showing shows the 1 year. And you see how the stock's really fallen, the United Healthcare stock. And this caused me to really switch horses. Now, the ELV brand, I don't think has the same stature as United Healthcare. And United Healthcare has had a big drop because of the stories, the sentiment versus fundamentals. Fundamentals on United Healthcare look fantastic. So I switched horses. Why I think maybe you're seeing a better move on United Healthcare than ELV is because of brand and the discount available on United Healthcare. United Healthcare also has far more famous super investor investment in it, especially some of these new investors like Michael Burry, Warren Buffett. I mean, they are betting on United Healthcare, so it has a lot of support. So I would say that that's the reason why United Healthcare is doing better than ELV. All right, so let's kind of tie a bow on this stream. Fantastic stream. Nicely done, Daryl. Thank you, sir. We covered 13 stocks, and I think we made a lot of good observations out there. We've got a market that's up 1.47%. On the NASDAQ, we've got the S&P up 4.84%. The Dow is up 0.41. Some spaces are flourishing. Man, Qualcomm, why can't every day be like this? Because, I mean, I'd probably get spoiled and I'd probably be complaining if a stock only rose like 5%. So Google up 2.35, Meta up 1.6, Microsoft 1.7, NVIDIA, get out of my way, I'm going higher. Man, really, really impressive. The safe spaces are in the red. These guys, man, this week, I'm not going to look at this side of the heat map because I don't think it's going to be a pretty picture. I think the heat map is going to be dominated by tech, software, communication services, internet retail. Just imagine, like, you remove the worries around tariffs away from Amazon. How much more e-commerce do we expect being done? Whew. It'd just be incredible. And right there, Mike, sometimes the market, Qualcomm, why can't Salesforce be like Qualcomm? I think it's going to have days like that in the future. But for now, the market's like, yes, software, we just don't want to buy it right now. It's kind of like the toys that, we play as youngsters. We forget about or we don't like a certain toy and we just leave it in the toy box. But the market will pick up these toys at some point in the future. I think it will. There's too much value here, way too much value. And I'm going to just cautiously watch it, just just waiting for the right time. And I'm going to jump in head first. Like when Adobe starts to work, I'm in. But, we've had really good conversations on Adobe as a channel, community on the member calls. And I love the back and forth. I love that some investors are saying, I think Adobe can go much higher. I put out my comments. I think we should continue to talk like that because I think our differences make us stronger. And Adobe just isn't working. You measure the value, it's way discounted. Same thing with Salesforce. When they start to move, they're going to move. They're going to move for a while. And I want to be a part of that. So, all right, guys. So I think this is a good point to conclude our live stream. We've gone over 2 hours. And let me thank you again, Daryl. Anything of note this week? Oh, let me mention something before I turn it over to you. So we're not going to stream on Wednesday morning. We're not going to stream on Friday morning. Instead, we're going to stream on Wednesday afternoon to do the watch party for Microsoft, Google, Meta. It should be a huge stream. Hopefully you can join us for that. And then we're going to stream on Thursday, watch party for Apple, Amazon, everything else that's going on. Eli Lilly announces on that day too. So that's how we're going to play this week. We're going to have 3 streams. And I hope you can make all 3. Well, you already made today. I hope you can make the other 2. And that's a special scheduling note. Now, what's going on with your channel this week, Daryl?
So I see a question, what to expect from the report tomorrow from UNH. So I just want to point you to this video because that's going to cover UNH. Just looking at the number of views on this one in less than 24 hours compared to these other ones. There are a lot of people interested in UNH right now. So if you want to know what I think is going to go on, you can take a look at there and find out what the implied move is. I have a few more of these that I'm getting ready to prepare for some of my holdings. One I'm going to work on either today or tomorrow. So that one will be available soon. So that's what I've been working on.
Awesome. Thank you, sir. All right. Well, with that, everybody, I think we will end the show there. Thanks so much for tuning in. Really appreciate it. You guys, good luck this week. Enjoy the green day. Let's fingers crossed that the U.S. China ink a nice trade deal. Pretty much expected interest rates are going to go down, or the Fed's going to act on interest rates. And fingers crossed that these huge companies are going to announce terrific earnings, and we may have a pretty incredible week ahead. I really look forward to seeing it all unfold. And I look forward to streaming again with Daryl on Wednesday and having you guys in attendance so we can go over it together. Everybody have a terrific day and a great week.
Take care, everyone.